Hello, and welcome to RAK ICC's webinar on succession and estate planning in an uncertain environment. We're delighted that you're able to join us today and listen to a very intriguing discussion. And what we will do is we will let the panelists say a few words, and then we will go into a question and answer where I will pose a number of questions to the panelists. And then at the end of that, I will also note the questions that you are asking. So please, in the bottom where it has the Q&A, post any questions that you have. And then I will ask those of our panelists as we go through. At the end of this webinar as well, we will send out and respond to any questions that we're unable to answer, and we'll send out a link to this webinar, and it'll also be posted on our RAK ICC website and YouTube channel. So let me just sort of confirm who our panelists are today. We have Dr. Samir Al-Ansari, who is the CEO at RAK ICC. Then we have Dr. Ashraf Gharnal Eldin, who is the CEO at Hawkamar. And then we have James Pollard, who's a tax partner here in Dubai with PwC. We're actually going to go into the webinar now, where James is busy talking and giving an overview of succession and estate planning. So we will pass across to James now. Thank you very much.
So we call this an infinity wheel, again, real consulting speak, but it's split into two sections, as you can see. So we have owner level issues on the left, and then business level issues on the right. All of these are linked together by the infinity loop. And Dr. Ashraf, I think, talked on or touched on some of the points in both of these sides, actually. I'm actually going to focus on the left for the purposes of this succession kind of discussion. So we believe that the key to longevity and succession of a business and a family, for that matter, lies in this ownership strategy on the left side of this wheel. And this is explained, in our view, across 4 key themes. So as you can see, wealth at the top, and that's how you manage your wealth, how you protect it, and how you grow it now and for the future. Governance, obviously critical to this discussion. So this covers effective and professional governance of your individual needs, your business needs, and the needs of those around you, i.e. your family. Purpose and values is key. Always has been, but the identification of your purpose and the communication of these values is critical. And again, we see this more than ever in the current crisis. Continuity, obviously, how you ensure a smooth and well-managed transition for the future of your business. So that's fundamental. So I'm just going to elaborate a little more on the governance and continuity aspects, although all of these themes are very linked to the overall succession discussion. Effective governance, I think, both at a family and corporate, is of critical importance at any time, and we all know that, and we've seen that more and more in the region. But it's even more vital during a crisis stage. We've never seen a crisis like this, obviously, but this is when the trust, transparency create can be a real differentiator in your succession journey. So, I mean, obviously, the crisis that we see today has created governance risks that go far beyond the usual challenges. What have some of our key recent recommendations been in this respect? So if you have a family council, which we see quite a lot here, that should be absolutely central to the decisions you're making. And it's worth considering whether at this time other family members should be part of that, for example. So we're seeing a number of families think about that. Can they bring unique skills or crisis relevant skills even, and experience in some cases? Also, I think more on the business level, it's critical to assess whether your existing board are fully equipped to manage this crisis and the related risks. Again, unprecedented, and most people don't have that much experience in a crisis as severe as this. So ask yourself if anyone should step in who could potentially contribute further. So is it worth bringing in new board members even? And then obviously going forward, it's going to be critical to assess how the crisis was handled in the business and where the gaps were and if those need addressing. The other sort of key recommendation we've been seeing and talking about is, and you know, it's kind of obvious, but establishing a sort of cross-functional steering committee led either by a senior family member or a C-suite, and then with senior representation from across the business, bringing different perspectives to that. So, you know, obviously HR, looking at workforce, finance, legal, IT, health and safety, all of these people potentially very key to have at the table. In terms of continuity, so just moving on to that topic, and succession is critical, obviously, to the success and overall continuity of any family business. While this can often be a relatively drawn-out process and difficult, as Samir said, some of these topics are difficult. A crisis like today demands quick decisions and effective decisions, and that's one of the that's something that we've seen families, I think, struggle with. These now include establishing emergency plans, both for the business and the family, and even clear leadership transitions, especially where older generations, unfortunately, have been more vulnerable to the virus, as we've seen. So one thing we're seeing is this really is potentially the time to turn to the next generation for leadership. And we believe the younger generation has a huge role to play in this crisis, both in the family and the business succession. This has been borne out in a number of recent surveys we've done on next gen, and that was even before COVID. So we see the next gen really wanting to step up. And again, that's not always an easy transition, but you know, particularly around digital transformation, and Dr. Ashraf mentioned that, so that will be interesting if we can explore that a little bit further. So in terms of this area, what are some of the key recommendations we've been putting in place or talking to clients about? So again, if you don't have this, obviously a clear ownership plan needs to be in place, or revisiting that, and that should, you know, sadly address any losses in the family, also including reviewing wills, setting out clear leadership transitions, both again at the family level and at the business level. Give your next generation potentially the opportunity now to prove themselves. Again, I just mentioned this, but by applying their digital savviness, and this we see can make a difference between falling behind and staying ahead. Particularly in areas such as remote working, which we're all now doing, as shown on this seminar, and other digital solutions that are relevant as these become more and more important. Very topical is also involving your next gen in using social media and using that effectively. So it's something that, you know, older generations not as comfortable with typically. So again, ensuring you have a clear, confident voice out there with all stakeholders, we see critical to the overall succession story. So it's worth just finally saying that purpose and values, which again is on that slide, of both the family and the family business, we see has never been more critical. And a number of families, both in the region and in Asia in particular, actually have said, you know, this has been critical, this has been key, this has helped them through the current situation. So now more than ever, we think it's important to stay united, obviously, as a family. It's likely that this will be key to helping sustain confidence and trust through the crisis, and of course, any successful succession going forward. So that's all I was going to say, Gary, and I will hand it back to you.
Excellent. Thank you very much, James. Thank you, Dr. Ashraf, Dr. Samir. So that sort of sets the scene nicely now. So we'll sort of go into a little bit of detail. And as I mentioned at the beginning, I've got a number of questions, but if you have questions, please post them and I shall ask them to the panelists. And I guess just sort of come to you, Dr. Ashraf. In the current situation environment, what do you think organizations should be doing or considering in terms of succession planning? What should be the top 1, 2, 3 things they need to be looking at right now?
Well, I mean, especially if we focus maybe on family businesses, whether these are small or large, number one is moving to the right generation. Because one of the things we have realized in some family business actually we deal with is simply that now the generation which is still in charge is maybe the first generation, which is in the 80s, while the second generation, which should be in charge in theory, is actually in the 50s and 60s. While in fact, now, because of the crisis and what's happening and the technology challenges, the generation which is equipped to be in charge is actually the one which is in their 30s and 40s. So it doesn't have to go through the first to the second generation, it might actually jump from the first to the third generation. So number one, who are the right people in the family or in the business who should be in charge? That's the first thing. Second thing is the pandemic made it very clear that the technology challenge is massive. Now, even before that, we have realized, as we all know, the disruption caused by technology in the last couple of years, you know, the fintech and the 3D printing and lots of other stuff. So that was already there. But the pandemic made it clear that it's here to stay. I mean, the concept of technology is evolving very fast. And I expect even after this whole pandemic is over, now businesses will change their way of thinking and their business models where technology will be a key thing. Now, the question to ask is, again, who are the right people who should be doing that? Third thing, we have to make sure that they are equipped with different things. Number one is experience, because again, the first generation, they have massive experience, but then they are also equipped with understanding the realities which we are facing right now. So that's something else which really has to happen. And when it comes to succession planning, we always say it is much better to plan than to wait and see what happens. Because we have seen lots of families wait until, you know, God forbid, the founder dies or whatever, and then they start to see, now what can we do? It's much better to plan it ahead because it's really capacity building for this person. So if we decide that, you know, some people are more qualified, they should be in charge, it's not going to happen immediately. You'll have to prepare them. So therefore, it's good to plan how to equip them with what they need, how to make them understand the full business, how they should, grasp the financial elements as well as the marketing and commodity aspects and so on. So it takes time. So it's better to plan it than to wait and see what happens when the generation which is in charge now it disappears for any reason.
Thank you, Dr. Ashraf. Dr. Samir, coming to you with your sort of advisory hat on and your experience in this market, you know, this pandemic and situation has obviously caught everybody by surprise. So absolutely right, as Dr. Ashraf said, it's about planning ahead and being organized and you know, having that plan in place. What's your take on that? You know, if you've got a smaller family or a smaller business, if they don't have that capacity or capability within house, or, you know, how do you choose the right person in the current situation?
Yeah, that's a very good question. And well, 33 years in the region, so I've dealt with big organizations, small ones, big family offices and small ones. And for those who don't know, I actually sat on the board of Hawkama for 4 years and even had to step in as acting CEO at Hawkama before we hired Dr. Ashraf. So I had a lot of experience with family groups and the ups and downs and the challenges. And what's important to remember is that for a long time, this discussion was kind of brushed aside in the sense that, oh yes, Samir, we know it's important, but we have time. We know we should do this, but we have time. We don't need to do this now. Let's talk about it another time, etc., etc. What this has done is it's been a wake-up call. It's shaken everybody up, and we don't need that slide on the screen. It's shaken everybody up and really made them think now what needs to be done. Now, just picking up on what Dr. Ashraf was saying also, that one of the challenges within these family groups is actually ensuring the engagement of the family members and actually being able to figure out who is interested in the business, who wants to be in the business, who wants to be engaged in the business, because many don't, to be honest, and you can't force them to do that. So it really starts with a gap analysis as far as I'm concerned. And it starts from the top. It starts from the chairman and the board pushing this down, because if you leave it to management, it won't happen. It's got to be chairman and board working with the CEO and HR to do this gap analysis and understand what do we have, what are we missing, how do we fill the gap? Do we fill the gap with more family members, or do we get professionals, executives, subject matter experts, whether they're at a board level or in the executive management team, to fill the gaps? It starts really with that, and then you have an implementation plan. And what this situation has taught us is that the normal implementation plans, succession plans, where you say, oh, I have XYZ who will be ready in a year or two. Maybe that person's ready immediately, and these people need 3 to 5 years to be ready, is not good enough. You need that long-term succession plan, but you also need immediate plans. You need something where you literally press the button and everybody knows what they have to do and what is expected of them. So I know there's a lot that I threw at you there, but it all kind of comes together. It's a gap analysis. What do we need to do? How do we fill the gap? It starts from the top and has to be forced on, and it's short-term implementation with long-term plans.
Thank you, Dr. Samir. I mean, James, taking that through to yourself, I mean, from your experience working with families and family businesses, there's a cultural element here of actually handing over from first generation to second to third or whoever. How do you deal with that? And again, is it different now where we sit to how it's been previously? Have first generation family patriarchs changed their view? How have you got involved in that discussion?
Yeah, I mean, look, I think, not to sort of re-say it, but I think Samir captured a lot of the issues. I do think, as we discussed, we are seeing more people, let's say, you know, at a very, let's say the patriarchal UBO level, or matriarch, obviously, you know, really considering and recognizing their own mortality. So that has opened up a wider discussion. I think, you know, as Samir said, it is always difficult, and these aren't easy discussions, but we've seen this as a time for reflection, potentially a reset or a catalyst for many families in terms of how they view their long-term succession plan. So this, you know, to some extent has made that discussion easier. And, you know, we've seen a number of families looking at restructuring already. Again, look, you've had a scenario where there's so much to deal with, but, you know, it's not like I've seen a flurry of, you know, getting this done, let's say, but I think that will change. And I think
Sorry, we're losing you there.
Started. So as I described, this kind of reflection out, families are worried about safeguarding their business and other assets for the future.
Okay, thank you, James. Dr. Ashraf, I just
sorry, did I cut out there?
Yeah, it's fine. It was only for about 5 seconds, so that's fine. We got you.
Okay.
Yeah, Dr. Ashraf, just coming back to you, looking at sort of emergency succession planning, which was where we're sitting at the moment. I mean, how does that balance against long-term succession planning? Is it just take a short-term view and then deal with it in 6 months' time, or how do you combine the two?
Well, again, they are different, but I mean, I'd like to elaborate on something which Dr. Samir mentioned, which I think is extremely important, and that is about engaging family members, but also engaging outsiders. And this is really the key question that the families need to ask themselves, whether among themselves or getting some advisors to do that for them. Now, we have to agree on what is the objective of that family business. Is it creating wealth and value for the family, or creating jobs for the family? And of course, the difference is really quite big. I mean, in many cases, what you can see is, as Dr. Samir mentioned, some of the new generations are not actually interested in the business, or, you know, they have no idea how to run the business and so on. So if we make these people join the business, and if we give them some sort of lead in the business, they actually might destroy the value from the family because they are simply not interested or not qualified enough. So the family has to decide whether this is, you know, what they would like to do, or no, let's actually engage those who are qualified, whether from the family or outside the family, so that to make sure the business is successful and we have more wealth. And of course, the more generations we have, the more, you know, wealth we need to generate for them, so that we can maintain their standard of living, if you like, using the same sort of business that we have. So the key difference, as in your question, is simply when we have the luxury of time, we can plan, we can qualify people, we can select the right people, we establish the process and so on. But when we are hit suddenly by a crisis like this, and we have to move fast, then, you know, the time available for us to make a decision is shorter. But yet, again, I do emphasize is simply that you need to ask yourself whether it is better to use somebody from the family, despite that they might not be interested or qualified, or it's better to get somebody professional from outside to put the right structure, and then we decide. And so in my opinion, it's really the time to you, available to you, and then getting the right people in place to make sure that you are maintaining your business, and then you decide later on what you'd like to do in the future. In all cases, it's much better once things settle down to have a long-term plan, policies for hiring people from the family, outside the family, compensation policies, hiring process, and so on. But now we don't have the time, we have to move fast. So moving fast means it's much safer to get somebody professional to do the job, and then we decide later on the process to engage the family again into the business. Thank you, Gary.
Thank you.
Yeah, Gary, if I can add to that, if that's okay, I was just going to say, we've seen a bit more engagement with the we recognise the same point before, which is critical, as both doctors have said, around not everyone wants to be involved in the family, and you shouldn't force that, and that's always been a challenge, particularly as a lot of the businesses in the region are, I'll call them traditional businesses, and they're not evolving or haven't necessarily evolved as fast as the next generation, particularly the really young generation now. They call it the 20s or something, or even early 30s. But we've seen a bit of a shift there because this crisis has also made people realize that the disruption and the fact that the business itself really has got to change means engaging that generation can be done in, I'll call it a new, with a slightly new mindset. And even that generation who might not have been interested before are now thinking, how do we make this business survive? Can we use our kind of new world skills, if I can call it that? So just to add.
Thanks, James. Dr. Samir, before I come to the next question to you, is there anything you want to add to those specific points?
No, I think it's all been covered, and I think this subject about next generation, I say this started, but it's been quite slow, and what this will do is it'll accelerate the need to engage the next generation, or at least to know for sure, are they interested or not? Do they have the skills to be involved, or do we need to start parachuting in family members and plan ahead with that in mind? So this is really a very important subject, and there's always a silver lining in these things. I think the silver lining here is that this has pushed everybody to think about these things and accelerate the thinking about the solutions for these challenges. As they say, when the tide goes out, all the boats are naked. So it's brought out all sorts of issues. Businesses are challenged, capital lines, you name it. Management is being tested. And I guess the other key point here is that it really depends on the size of the business, the complexity of the business, and the sector that they're in. So, technology, complicated businesses perhaps need different solutions. A large, very large group probably needs different skills to a small family business. So I think size and complexity is a key factor in some of these decisions.
Thanks, Dr. Samir. I mean, you referenced the word solutions there, and that was what I was going to ask next. As a result of what's happened and the discussions that we've just had over the last half hour or so, things are going to be different, and companies and families will need to do things differently. So if we take it to a practical level and looking at the sort of solutions that companies could actually do, what would you be looking at? I mean, again, from a RAK ICC point of view, what solutions are available?
Sure. So there's a couple of slides actually that I would like to take you through, because it'll be easier to explain to the audience if it's on the screen. So perhaps we start with this one, which is probably the easiest, simplest type of structure that can be implemented by a family group and even a small corporate structure. Really, at the end of the day, it's about ensuring that there is continuity and safeguarding of assets in case one or more family members pass on. So, creating a passive holding company in which the various shareholders, founder, and family members can become the shareholders of that RAK ICC holdco, under which you put your bonds, your equities, your real estate, etc., etc. And of course, as most of you know, hopefully all of you know, Dubai real estate and international real estate can be structured under a RAK ICC company. So the main benefits here is really the effective structure for ease of ownership transfer, and of course for inheritance planning. The nice thing about structures like this is that because it is a company that owns assets, you can have bank accounts, you can raise funding and debt against the assets of the portfolio, etc., etc. A key advantage, of course, is the maintenance of privacy. So in this case, this is a company with UBOs. It's not each asset owned by the founder. So passive holdcos, which can be looked at as special purpose vehicles, where you've got a company and assets under each of them with different shareholders on top. All of these things can be structured in a very, very cost-effective way, in a very simple way, and will give the founder, the family members, peace of mind in case something goes wrong. So that's one type of structure. Let's go to the next one. And if you keep that company structure in mind and just replace the company with a foundation, you'll see that a lot of the advantages of having a company actually can be replicated and in an even more effective way with a foundation. So in this case, the key difference is the box that says founder, because a foundation is a, what do we call it? No ownership or self-owned company. So there's actually, they're often referred to as orphan companies because there's no shareholder on the foundation. In this case, the founder creates the foundation, puts the assets in the foundation, and the foundation then has a clear set of rules as to who the qualified recipients are, etc. A lot of people will be familiar with trust, and this is a different form that actually works better for this part of the world, because very often trusts have been resisted in this part of the world because you're passing on control to the trustees. In foundations, the foundation still owns the assets, is still in control of the whole thing, and the founder hasn't lost all of that. Just looking at our structure again. So once you've created the foundation and you have put the assets under the foundation, you've decided who the recipients are. The other thing to keep in mind, if you look at the box that says council members, think of a company. The council members are effectively the board of that company. So the council members could be the founder, the family members. They through this structure, they decide all of the governance and decision-making of the foundation, but they still have control. In a trust structure, they've lost all of that. And on top, you've got that box of guardian, which by the way is optional, but very often recommended, because that guardian is usually a professional advisor, a lawyer, an accountant, and so on. Their role is to act as a supervisor, and especially important if and when the founder passes away, because they act as the checks and balances to make sure that the council members are abiding by the wishes of the founder. Foundations are a great way to provide asset protection, legacy planning. You've got the guardian oversight, you've got the governance of decision making by the council members. So it is a very effective, very cost-effective way of achieving all the objectives that we've been talking about. And I'd add one other key advantage, which is the fact that RAK ICC foundations are private. And that's very important for a lot of the families in this part of the world. They don't want the details, public information, and so on out there. One final, because very often we're asked, okay, how is a foundation different from a trust? Why would people switch to foundations when they're familiar with trust? And I think I alluded to some of the points, but the key points are that a trust has no distinct legal entity, whereas a foundation is. It's effectively a company with no ownership. A foundation is also appearing in a registry, whereas a trust is nowhere to be found. Ownership is an important point. The contractual relationship is with the foundation, not with trustees. And then the cultural point that we find, and since we launched Foundations a few months ago, there's been tremendous interest because big families in this part of the world that are concerned about legacy and family planning, that were not comfortable with trusts, are now seeing that Foundations is a very viable and attractive alternative to those trust structures. And the final thing I would add is wills. So the other thing that we offer is our cooperation with the DIFC on registering wills. So for non-Muslim family members who are concerned about continuity, succession, asset protection, legacy, making sure that their wills or wishes are fulfilled, wills is a very, very important tool to have. And that can be done, again, in a very cost-effective way using the team at RAK ICC. I'll stop there for any questions.
Thanks, Dr. Samir. I've actually got a few questions coming through. Let me just pick up on Foundations because it's obviously relevant for where we sit at the moment. And I guess, James, probably pointed towards you because I know you do a number of these. So one of the questions is, can a foundation assist to hedge Muslim families against Sharia consequences on demise once the assets are placed in a foundation? Oh, I've asked James that and he's disappeared now.
Sorry.
Oh, there you are. I can hear you, James. Yeah.
I'm back, but I missed the question.
Okay, so I'll just repeat it. Can a foundation assist to hedge Muslim families against Sharia consequences on demise once the assets are placed in a foundation?
Okay, so there's not a simple answer to that. The simplest answer I can give is potentially, but it depends where the foundation is established and what the laws around that are. I mean, generally, we do see corporate structures and foundations and potentially trusts used to help, what I would say, mitigate the application of Sharia, but it does need, the jurisdiction is key. And, you know, that will really drive whether or not what I would call the robustness of the planning. But it certainly helps because obviously you've put assets in, if I use Dr. Mir's slide, into a vehicle, and then you've described, well, it's that vehicle that then owns the assets, and the recipients or the beneficiaries of that can be described in the documentation of the foundation, for example. So if that is described in a different manner to how Sharia might apply on passing, then yes, that can assist. But in certain jurisdictions, that can obviously be challenged by the recipient. So it's not, I wouldn't say watertight, but again, depending, and I'm kind of simplifying, but it can be helpful, yes. Okay.
Thanks, James. I've just got another one that links to trusts as well. So probably best pointed towards you before we go into some different topics here is, what is the difference between setting up a foundation versus a trust or a holdco in terms of costs, privacy, etc.?
Well, the difference is, I wouldn't focus on the costs per se at the start. I think the differences were what broadly what Dr. Samir highlighted very articulately. So look, I think I almost look at them in a bit of a chronology to some extent, or holdco is different. You still typically own the assets. Everyone understands it. It's you have a shareholding. What I do like about a pure holding company structure is, I think it's the first way to simplifying your arrangements. So if you have, let's say, a number of assets, and most people do now, and those typically might be across a number of geographies, in a scenario where something happens to you, and you don't even have to be old for this to happen, obviously, but if something unfortunately happens, if you've held all of these assets directly, you're suddenly in the world of having to deal with potentially multiple international inheritance laws, multiple probate issues, you know, transferring lots of different things, understanding lots of different tax impacts. So having it all brought under one umbrella is the start of a simpler structure. And there's lots of solutions in the region, but, you know, Dr. Samir highlighted the RAK ICC one specifically. And people also use that as a good segregation, I would say, between business assets and personal assets. And that's when we often see holding companies. You then move to, I'll put trusts and foundations a little bit more into the same bracket. But those are arrangements where you pass ownership to something else. The trustees in the case of a trust, or the foundation in the case of a foundation. Now, broadly, we see that as more robust and governance, because the assets have actually passed out of the hands of the settlor in the case of a trust or a founder. So that's kind of how I see them. I think the latter two are just a bit more sophisticated, but quite similar, with different pros and cons. And it's important just to understand the family dynamics, what the objectives are, where the assets are. All of these things come into play as to which makes more sense. Okay. And then, I mean, on the cost side, I would say, I mean, it can vary hugely, is the honest answer, depending on the complexity of the assets. But I wouldn't necessarily say one structure is more, you know, materially more. Maybe a holding company is the simplest way to sort of proceed. And then a trust and a foundation is a little bit more complex because other people might be involved.
Gary, I would just like to add to that, if I may. I can tell you from experience, trusts are expensive and are a nightmare when you want to make any changes. I would also add to that, that in today's environment of more regulatory requirements and the introduction of economic substance requirements globally, trust structures where you've got several vehicles in many jurisdictions around the world that are now being caught by ESR have become very complicated and are having to be, whereas a foundation in the UAE and a RAK ICC foundation is actually not required to fulfill any economic substance requirements. So it is easy to implement, very cost effective, and easy to maintain going forward. I think this is a huge advantage going forward.
Yeah. I mean, look, I think that's a fair point. I mean, trusts are getting much more complicated. You can, not to go into a lengthy discussion on it, but you can achieve, we talked about very binary examples, and most of the structures we would look at would involve, you know, foundations with holding companies, for example, and you know, a whole mix of things. But no, I think it's a great comment from Dr. Samir.
Gary, if I just may say something here, which I think, again, Dr. Samir mentioned that actually also the DIC had the same system as trust and foundations and so on. However, what we witnessed in reality is simply that does not prevent, you know, sometimes as mentioned, as James mentioned, some sort of family disputes and legal challenges and stuff like that, based on the jurisdiction in which you are operating. So, and that's why our advice is simply that you need to differentiate between two things, and the two of them are really very important. One of them, which is corporate governance, which is how to govern the wealth, how to have the right structure, whether you talk about, you know, different holding companies or trust or foundations, whatever. But then you have also to have the right family governance, which means the family must have a system of deciding on all these things together. Because what we have seen sometimes is some of the family members, maybe who are in charge of the companies, who have certain interests or whatever, they influence some decisions in a way which will actually undermine the other people in the same family. And this creates lots of legal disputes, and then courts have to interfere sometimes. And that's why I'm saying the concept of foundations and so on is not really a magic solution that will solve all the problems. No, it will not. It might address certain issues, but it doesn't actually solve the entire problem. What will have to be done is simply a family governance structure by which we decide on how to make decisions regarding the business, how to agree together on what to do, and how to be fair to everyone. Because again, some of these foundations and trusts, they are not maybe sometimes fair to everyone in the family, and this creates lots of complex issues. So again, what advising is, before that, you should look at how the family is interacting with the businesses and how to make the right decisions, and then deciding what to do, whether you go for a holding company, foundation, trust, or any other form that might be available.
Thank you, Dr. Ashraf. I mean, this is definitely a hot topic because there are plenty of questions coming through around foundations. So we will record all these questions and reply back to everybody who's registered. So if we don't get to answer your question, apologies, and we'll come back to you. There are quite a number around fees and things like that, which obviously we won't get into here, but we'll come back to you on through email. I guess just one relevant one for you, Dr. Samir, is sort of the comparison of a RAK ICC Foundation and a DIFC Foundation, and can a RAK ICC Foundation hold Dubai real estate?
You're right. Yep, very good question. Comes up a lot. So our MOU with the Land Department did not include foundations, and that is being looked at and addressed right now. So we will hopefully shortly have an amendment to our MOU whereby the RAK ICC Foundations can own real estate in Dubai. We know that other foundations have been able to do that. So I don't think that is going to be a problem. It's simply a matter of time. Of course, COVID and people not being in the office has slowed us down. But that would be the main difference. I think the privacy point is a very important one. So you know, the RAK ICC Foundations are private. There is no public information.
Thank you, Dr. Samir. James, just another one around protection of assets. So the question is, would there be any difference in the protection of the assets between a trust and a foundation? Also taking into account whether the law of different jurisdictions might have a different interpretation.
It's really a very detailed legal question that I'd have to sort of bounce off my. I mean, I don't know categorically the answer to that, I have to say, but I don't think there would be a specific difference. I mean, the assets are legally owned not by the owner. So if we or the original, you know, settlor or founder. So if you're talking about piercing that veil, as people like to refer to it as, in terms of, you know, in the case of, well, either, you know, any kind of claim on those assets, either by, let's say, disgruntled family members or creditors, you know, both have a legal wrapper around them, which means it's relatively hard to get to those assets. Now, different jurisdictions have different levels of what we would call firewall laws, which, you know, potentially make that position even more robust. So that's a quick answer to that.
Okay, thanks, James. I'm just conscious we've only got a couple of minutes left, so I'm going to move off the foundations questions now. And I've had an interesting one, a sort of GCC specific, and maybe Dr. Ashraf, you can respond to this in terms of your sort of knowledge and experience. And the comment is about an increase in VAT in Saudi Arabia, obviously, and economic situation. Is the UAE seeing a witness of influx of GCC families, particularly Saudi families, looking to headquarter in their family offices in Dubai? And, you know, is this a real opportunity for Dubai and the wider UAE across the region?
Well, on the first one, actually, I don't have the numbers on this, so I don't really have statistics on that. So, but clearly, of course, I mean, when you think about one country in the GCC which is increasing its taxes and adding more burden on the businesses, this automatically will actually play in the favor of other countries in the same region, and the UAE being a major business hub, even globally speaking. So I would say that's a true opportunity. So if I were in the business of attracting businesses and family offices to move to the UAE and Dubai, this would be a golden time, a very good time to do that. Simply because the government is very much committed to reducing actually the burden on companies. So what the UAE government is doing is reducing tax and fees and so on to make, you know, businesses able to float easily and supporting businesses in that respect. So I would say it is an opportunity for the UAE, definitely, yes. Numbers, I don't have the numbers now. Maybe officially we'll have numbers you know, coming up from the government later
I mean, Dr. Samir, just sort of taking that question to you and linking it, within RAK ICC, we're obviously seeing a large move of redomiciliation from around the world into RAK. And I guess sort of where do you see, where the question previously was about Dubai, where do you see RAK ICC in that respect of gaining companies not only from GCC and Saudi, but even globally?
Yeah, absolutely. And I think first let's talk UAE. And let's put COVID-19 aside. But generally, I think the UAE is in a very, very, very strong and sweet spot right now because we are a white-listed jurisdiction, a strong economy that ticks absolutely all the boxes, and a lot of our competitors are either on blacklists or watch lists and so on. You've got a phenomenal working environment and great tax jurisdictions. So no taxation, whether it's corporate or income tax, of course, 5% VAT, but then we tick all the boxes. That is why we're seeing, we call it a flight to quality, because when I say quality, I mean it's not just regulations and what comes with that, but whether it's living standards, ability to do business, meeting economic substance requirements, etc., etc., etc. The UAE well and truly ticks all the boxes. And I would say, other than Singapore, and they have tax, we don't, most other jurisdictions have got challenges, whereas the UAE really is in a perfect spot to take advantage of that. And we are, as you rightly said, Gary, seeing a tremendous amount of redoms from many countries and many jurisdictions around the world for all the reasons we have just described.
Yeah, I mean, Gary, I don't know if you want me to just add to that. I mean, I've been I think one of the longest standing sort of tax people in the UAE. So I've been here for 15 years now, and was for sure one of the first international tax people in this environment, to the extent that pretty much all my colleagues just had no idea what I was doing here. But look, I've been kind of saying what Dr. Samir said for a long time. Not that you're, subjective or biased to one jurisdiction, because I think if you give clients the best advice and understand what they need, then that can drive multiple solutions. But the UAE is really very attractive now. It's a place where you can have real substance. You can bring up your family. You can have your business. It makes sense. The legal framework, the options around vehicles like a RAK ICC Foundation that we've been talking about, just make that even more attractive. We see a huge amount of our clients looking at redoms. So this is this is both an optics perspective, a complexity perspective, and in reaction to the economic substance rules, as Dr. Samir said. So look, it's very topical. Lots of families in Saudi in particular also don't necessarily want to have all of their assets in Saudi. That's more political risk, but that's been on the table for a while. But that's always there and is still there.
That's great. Thanks, James. I'm just conscious we've reached time now, so I'm just going to pose the same question to each of the panelists to focus on or to respond to. It's obviously been a very difficult few months for many of us, and from tomorrow we can all fly out, and from the 7th of July we can welcome tourists back into the UAE. So hopefully that drives more business for everybody on the call and for UAE Inc., I guess. So I'll start with you, Dr. Ashraf. I mean, if we look at the last couple of months, what would you say is the top lesson we need to have learned when we come out of this?
Well, actually, that's a tough one. But again, I think the top lesson is maybe uncertainty and risk. Sometimes we think that when we have some sort of a risk structure and a risk committee or whatever, we know what are the risks. No, there are things which are totally unexpected that might happen. So the concept of resilience in businesses and ability to move fast is extremely important. Because again, we might, even after the COVID, we might start to have a new list of risks, but be assured that there are things which you cannot even think of. So the key thing is how to be prepared and to be very flexible and agile in responding to changes very flexibly, if you like.
Thank you, Dr. Ashraf. And James, your view on that? Top lesson?
So I think it's actually very similar. I was going to say anything is possible, but sadly in a bad way. So, you know, we've seen something that most people never could have imagined. So planning is really, really key. Most people wouldn't have had pandemic, obviously, on their business resilience lists, or if they did, it was like in the realms of not possible. But you know, that's really what we've seen across a cross section of clients in the region at both ends of the spectrum as well. So some who actually were very well prepared, and the transition, you know, into crisis was actually quite seamless. Others where the transition was extremely difficult and very, very challenging. The other thing that I would add that is key that is coming out is technology and how to deal with that. So, you know, a lot of the processes here are still very paper heavy. You know, just documents, where are they, signing things like checks. You know, this has been a real sort of practical issue, and I think we're going to see all of that change.
Thanks, James. Yeah, you're absolutely right. No business continuity plan had the word pandemic in previously, but they'll all be number one on the list now. So, so coming to you, Dr. Samir, last word from you.
Thank you, Gary. Well, not much really left for me to say. I completely agree with Dr. Ashraf and James. After a 35-year career, and I thought I'd seen it all, because I'd seen all sorts of financial crisis and frankly lived through wars and so on. I thought I'd seen it all, but obviously not. This has been quite brutal, and it's been one hell of a wake-up call, and has proved to me that even when you think you have things under control, you don't. And so we've got to always think out of the box. Leadership really does matter. It is all about leadership, because when these things happen, what do we fall back on? Our leadership structures, our governance structures, and our people. We've got to get that right. You can't leave that as, you know, we've got the people in place and everything's going fine. That can't be ignored. That is the key lesson for me.
Okay. Well, thank you very much. And thank you, Dr. Ashraf, James, Dr. Samir, for joining us on this panel, and for everybody who's dialed in and watched and listened. Thank you again. As I mentioned, we will respond to the questions and send them out to you. But if you have any others, please contact us directly at RAK ICC. Because again, there's a lot of questions around foundations and costs, etc. So we'll be delighted to talk those through with you and respond to any questions you may have. So once again, thank you for joining us, everybody. And please be safe and have a good day. Thank you.
Thank you. Thank you.
Thanks, everyone.
Thank you, everyone. Thank you. Bye.